You're listening to AI PRISM from Seoul Economic Daily.
It's Tuesday, May 19. I'd like to share some thoughts about global investors. If you think about it, the U.S. is kind of hemorrhaging top engineering talent right now, which is wild because...
Yeah, right at the exact moment they're trying to build the most expensive computing infrastructure in human history.
Exactly. And, today we're looking at how these rising global capital costs and this massive AI hardware bottleneck are just crashing into each other.
Well, we're definitely seeing a severe stress test in the markets right now. I mean, global bond sell-offs just pushed the U.S. 30-year yields past 5.16%, and WTI crude broke $100 a barrel.
Right, that classic triple high environment. High rates, high inflation, and high energy. And it just hammered the Korean exchange, the KRX. I mean, the KOSPI saw a 373-point intraday swing, which actually triggered 2 consecutive sidecars.
Yeah, and for you listening, it's worth noting a sidecar isn't a full circuit breaker. It doesn't halt all trading. It basically just stops algorithmic program selling for 5 minutes if futures move more than 5%.
So it's an early intervention, really, just to stop a rapid automated cascade. But what's really connecting this Korean market volatility to the U.S. inflation floor is actually the labor market.
Oh, absolutely. The U.S. just hit net negative migration for the first time in 50 years.
Yeah, over 10,000 STEM H-1B visa holders have left.
Which structurally reinforces U.S. inflation, right? Because it severely tightens the labor market for highly specialized roles. But it shifts that human capital back to Asia, which directly enriches the tech and pharma sectors in places like Korea, Taiwan, and Japan.
Right, and this talent shift is happening while U.S. big tech is just locked in this massive arms race. I mean, OpenAI and Anthropic now command, 89% of private AI app revenue?
Yeah, and their pre-IPO valuations are staggering, like $852 billion and $900 billion.
Wow. And to defend those valuations, they need insane physical infrastructure.
Exactly, because you can't just plug an AI data center into a standard power grid.
Yeah.
The power density of these AI chips is so extreme that traditional copper cabling just overheats and fails.
And that's where Asian industrials step in to fix the bottleneck. Like Meta just awarded Korea's LS Cable a historic contract. Right?
Yeah, a 4 trillion won contract, which is about 2.85 billion US dollars.
Just to supply bus ducts for their U.S. data centers. And, I mean, you can think of a bus duct as this heavy-duty industrial artery for massive electrical currents.
Right, to safely power and cool those super dense server racks. It's basically a massive picks and shovels play.
Exactly. It lets institutional portfolios access U.S. AI capital expenditure without paying those crazy valuation premiums you'd see with pure semiconductor plays.
Though, to be fair, the semiconductor side is seeing a massive structural repricing of its own right now, especially in data storage.
Oh, definitely. Because the AI build-out isn't just about processing power, you have to retain unprecedented amounts of data. Which brings us to Japan's Kioxia.
Right. They guided a 74% operating margin, which sparked a 2,220% stock rally.
Which just fundamentally alters the economics of NAND flash storage. And the direct read-through in Korea is SK Hynix.
Yeah, because while SK Hynix is famous globally for the high bandwidth memory or HBM chips that power AI accelerators.
Their secondary business is NAND flash, identical to Kioxia.
Exactly. And because of Kioxia's margin guidance, that entire NAND sector is getting revalued. SK Hynix actually holds stakes in Kioxia, now estimated at over 60 trillion won.
Wow, so that's roughly 42.9 billion US dollars in hidden balance sheet value.
Yeah, that value is forcing brokers to revise their consensus upward for SK Hynix compared to its MSCI peers in the region.
So while physical infrastructure and storage are revaluing, regional capital flow frameworks are also shifting. I mean, Japan's Financial Services Agency is officially classifying crypto as financial products now.
Right, they're aiming to allow public investment trust by 2028.
Which unlocks Japan's $4.4 trillion household savings pool. But I kind of struggle to see how retail access in Japan forces historically restrictive regulators in Korea or Taiwan to accelerate their own crypto timelines.
Well, household crypto adoption doesn't mean sovereign wealth funds change their rules overnight. It's actually about regulatory cover.
Regulatory cover, how do you mean?
So when a strict body like the Japanese FSA creates a regulated blueprint for Bitcoin and Ethereum funds, it provides a safe harbor.
So neighboring regulators might adapt not out of retail demand, but just to prevent institutional capital flight.
Exactly, to make sure they don't miss out on the liquidity these new structures generate.
Interesting. It really makes you consider how the simultaneous outflow of U.S. STEM talent combined with this continuous inflow of U.S. big tech capex into Asian industrials and memory giants, might permanently shift the center of gravity for global technology infrastructure.
Yeah, it's a profound structural pivot.
That's today's AI PRISM, Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a WAN-IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.